In this video, we're going to go through a very basic process of completing a bank reconciliation, and this can apply to personal accounts or business accounts. A bank reconciliation is completing the process of checking the bank statement against the check or transaction register. Real quick, a transaction or check register typically looks something like this, where an individual or a business logs withdrawals and deposits from a bank account into a register. The terms debits and credits are often used, and in checking accounts, debits are when money is taken out of an account, and credits are when money is added to an account. Here's an example of a bank statement, which lists all of the transactions in the account for a given month. This can include electronic deposits, other deposits, checks paid, electronic withdrawals, and any charges or fees. There are several different ways to reconcile these and make sure they balance out, but we're going to go through a very simple way to do this. We're going to go through the items in the bank statement one by one and check them off in the check or transaction register and on the bank statement. If you're doing this from an online bank statement, work downwards and make sure you don't skip any of the items. And I'll cover some common reconciliation problems toward the end of this video. We'll start at the top of the account transactions in the bank statement, the electronic deposits, and again, work downwards. One note, these check marks in the register mean these items were already accounted for from the last bank statement. So first is a deposit of $247.64 on 4/3. In the deposit column on the register, we have that listed. And for all of these, we want to make sure the dollar amount is the same, because if that is off, it can create some major headaches. So we'll check it off, and we'll put a check mark for that on the bank statement. Next is a deposit of $1,248.61 on 4/15. We find that in the register, put a check mark there, and a check mark on the bank statement. Next deposit is for $1.22 for some interest earned on 4/30. We don't have that listed in the register, so we need to add it to the register, which I've done here. And now we can put a check mark on the register and on the bank statement. Next is a drive-through deposit for $343.78 on 4/18. We find that in the register, and again check mark on both sheets. Next we have checks paid, which will have the dollar amount in the withdrawal column in the register. The first one is check number 847 for $147.33 on 4/1. We have that in the register. The date is not the same, but that's okay, as it sometimes takes a few days for checks to clear. The main thing is that the dollar amounts are the same, and they are, so we check it off on both sheets. To save some time, the next three checks, 848, 849, and 850, are all logged in the register, and their dollar amounts are the same, so we can check those three off on both sheets. Next is electronic or debit card withdrawals. First is $44.51 on 4/9, and that is listed in the register, so we check it off on both sheets. The next one for online TV for $12.99 on 4/11 is not listed in the register, as maybe it's an automatic monthly withdrawal and the person forgot to log it. So we'll add it to the register and check it off on both sheets. The next two, for $107 and $68, are listed on the register, so we can check both of them off on both sheets. And the last one is for a bank fee of $2.99 on 4/30, which is not listed in the register, so we again will add that in and check it off on both sheets. Now everything listed in the bank statement is accounted for in the register. The next thing we want to do is find the ending balance from the bank statement, which is here, $4,789.95, and the ending balance in the transaction register, which is $4,830.72. As you can see, these don't match. That is because we have these four items in the register, two checks, one electronic withdrawal, and one deposit that are not accounted for in the bank statement. The checks haven't cleared, so they're considered checks outstanding. The electronic withdrawal of $56.77 occurred on 5/1, which is after the end date of 4/30 of the bank statement, and the deposit of $278.33 was also after the closing date of the bank statement. So what we need to do is take the ending balance from the bank statement of $4,789.95 and deduct the amount of the two outstanding checks, which I've done on the screen, and this equals $4,609.16. Next, we need to deduct the electronic debit of $56.77, which equals $4,552.39. And lastly, we need to add in the unchecked deposit of $278.33, which gives us a total of $4,830.72. And now we have matching numbers of $4,830.72. So the reconciliation process is complete. So ultimately what we've done is taken the unchecked items from the register and either added them to or deducted them from the bank statement to get matching totals. And as I said earlier, there are many different ways to do this reconciliation process, but I think this is the simplest, and it also makes sure you don't miss any of the entries into the check or transaction register. And one note, we do not put check marks for these 4 items in the register, as they will appear in the next month's bank statement. Some common reconciliation problems include forgetting to enter a check, debit, electronic payment, or cash withdrawal, writing the wrong number down. For instance, a debit of $415.67 was entered into the register as $451.67. So the 5 and the 1 were switched around. Another common issue is making an addition or subtraction error on the register, forgetting to log a bank fee or automatic monthly withdrawal, such as from a subscription service, and having an altered or forged check. And that is the basics on the bank reconciliation process. All right, my friends, hopefully you got something out of this video. I do have more videos right there for you. Till next time, I am out of here.